if you were to go back to Edoardo in 2018, what are some things you tell him to look out for?
Probably there are like two mistakes that I made that made me lose like a lot of time. I would say try to focus in one industry. I wasted a lot of time like researching and acquiring know-how and different scattered companies that they didn't have any like correlation or connection with each other. That's really is not efficient as a way of like moving in the space. The second one, don't go alone. If you have like a partner that you get along with, that's probably the best way to move forward. When I speak to a lot of entrepreneurs, they take a lot of pride in saying, I'm by myself. I've been doing this by myself. You don't achieve a lot of things, by yourself. Buying a company of $1 million EBITDA and buy a company of $10 million EBITDA, it's exactly the same amount of effort.
If you were to walk yourself back then, who's never done a deal before, if you were to like take out a napkin at dinner and kind of write out, here's exactly step by step how to do a deal, what would that look like? Welcome to another episode of the Deal Flow Show podcast. Today we have a very special one. Our good friend Edoardo Maggini, managing partner at StarStep Capital, has an insane story from immigrant to startup founder to now fully into private equity. And we're here to learn a lot about his story, learning about how he's building an empire. So Edoardo, thank you for being here.
Thank you. Thank you for having me, guys.
For sure. I was looking into your story and looking into, what you guys are doing, but I think it's better to hear it from, the horse's mouth. Can you please give us a quick 2-minute intro for who it is that you are, what it is that you do, and who it is that you help?
Yeah, absolutely. Yeah, actually, I have seen all this. I would say all the spectrum. I play like all the roles of the ETA space. I started as a first of all like traditional search fund that didn't last so long. I tried firsthand for like a couple of months. That was like during the pandemic, a traditional search, and I was not by myself. I was with like a friend of mine that he was my partner. Then he had to like essentially like he had like some personal issues and he had to like drop out the traditional search fund. However, I was like kind of like more, I was like going forward in the traditional search. I was learning more about the ecosystem and the uh, great resource that we have here in the United States, which is the SBA bank. And that I realized, that it was not really like, for me, the traditional search. Um for different reasons. So I eventually pretty quick after like I would say a quarter, I transitioned to like more self-funded search, and I um, funded and created like the Orion's Capital. That was my vehicle that I was looking for companies to acquire, and after that, I uh, team up after like being like like a traditional self-funded search, more into I partner up with my two partners, which are Roger and Victor, and we created like I joined actually like it was already started, was already on, not too long, was like they had like 2 years of track record, and we transitioned into like a more independent sponsor, like, and that's where we created like StarStep.
Very cool. Very cool. So could you please go into what exactly is the goal of StarStep? What exactly are you guys building? What is this? What are you guys up to at StarStep?
Yeah, we base also essentially like we are operators. We have a lot of industry experience in a specific sector, which is like the coding space. For people that don't know what's coding, it's everything that has to do with finishing, paint, industrial paints, uh, architectural paint. They can be they can be or liquid paint, liquid coatings, powder coating, or spray coating. And we we've been like acquiring essentially companies in the space that it makes sense for us, that we see some values, some synergies, and we consolidate it into like our portfolio. We manage them, and we we started like pretty good. I would say like the real action began in 2023, 2023. So like
Hmm.
less than 2 years ago, they really started having some big traction, and and we don't want to stop. We are like very much growing mode now.
Yeah, very cool. So DJ was kind of briefing me on who it is that you're looking to compete with, and that's not a small company. That's not a small rival that you picked there. Can you kind of that kind of ties into you're obviously an author. You wrote a book talking about how to take on massive corporations, massive businesses. Can you kind of go into detail why you picked this target, why you picked this industry, why you're picking to do what you're doing with StarStep?
Yeah. Well, that's one was one of the reasons that I think like we believe like that that space it's really interesting for us. Um, well, my background it's in engineering, and also my two partners they've been like working many years in for PPG, which is like one of the largest global company that manufacture coating products. Um, and we believe that that space is interesting for us because it has essentially like the two bigger players, which is like PPG and Sherwin-Williams. They have combined like less than 30% of the market. There is not really like a monopoly.
Mm,
It's 70% of the market is like fragmented, smaller companies.
mhm,
There is not a lot of like it's not very like mm, big capex. Um, it's more like IPs, a lot of intellectual properties. Usually, like the owners of these companies are um, chemists, PhDs, that they started like their company 30, 40 years ago. They came out with their own formulation in a specific niche market,
mhm.
and they've been doing very well, very very well. Like and now like they're like reach retirement age, and they're ready to sell their company with their formulation and their coating product that solve a specific need of a XYZ vertical in that market.
That's killer. Eduardo, I'd love to kind of chat about how you got here because you have a pretty interesting story from a previous conversation we had. Obviously, you came over to the US at age 16. I think you bootstrapped a company before ever getting into buying companies. So I kind of love to hear from your perspective what that journey was like and, the differences between, bootstrapping a company with no outside funding to then now being on the other side and buying companies as your main growth strategy. And yeah, and also just your story of immigrating to the US and what that was like.
Yeah, absolutely. I came here in US. The first time was like for high school. I was like in a small town of Ohio, and then finishing my high school in Ohio. Then I went back to Italy to finish my undergrad, uh, and then after my undergrad, I came back over here in New York uh, for my MBA. After that, I started working. I was hired like by one of the largest industrial conglomerate. Um, Worked there for like quite some times, and then in 2018, I resigned and I started like my own company, Bootstrap it from zero, like more like a startup type company. Um, and I realized like how inefficient it is, like essentially like starting a company from zero, like bootstrapping it. Uh, there are a lot of like there's a long time between like the moment that you start and the moment that you actually like go to cash flow positive. Uh, Starting from like all the licenses and permits, and well, it depends on the sector. But I was like in a heavily regulated sector, industrial, and that was quite inefficient. So after like that I sold the company that I created, with that capital, I could like choose, or I start another company from scratch, or I started like I start like mm, buying companies that already have some track record and grow from there. That would have that was a path that it made more sense, given the experience and and the capital that I was like able to invest, and so I decided to take that route.
Right. And despite kind of some of those inefficiencies, as you say, you still saw quite a bit of success and were able to ultimately exit your bootstrap company. Can you talk me a little bit through that process, what that was like? How, how quickly did you grow that? How long did you run that business? Who did you end up exiting to?
Yes. The essentially the field that I was in, it was as I said, heavily regulated. The real value in that space was having like permits and licenses that was allowed to process hazardous waste. And once I was able to obtain those permits, the environmental permits, one of our one of our customer, which he was a trucking company, was a trucking company that they didn't have any facility to treat waste. They only had they was providing like essentially logistic service from hospitals and then to the facility that ultimately where they were disposing the waste. Um, and so it made sense, for them, to integrate it vertically with a facility, like ourself, like myself.
Right.
And he mm, he saw the opportunity, and he made me an offer, and ultimately I ended up selling the permits with the facility to them.
That's wonderful. Yeah, that's exciting. I mean, I'm sure. What walk me through what it was like. Where was your mindset at after how long? How long again did you run that business before exiting?
3 year. 3 year.
3 years.
Yeah.
And on the other side of that,
I started I founded in 2018, and I ended up selling it in November 2021.
okay, wow. And yeah, walk me through your mindset on the other side of that. So you've just exited. You obviously got a lump sum of cash, and you're kind of deciding on your next move. And it sounded like you were kind of realizing the inefficiencies, and you saw what they were able to do. What was that, thought process like moving from that first venture and then deciding on the market, the model, and all these other things that you've ultimately come to over time?
Yeah, yeah. The mindset was try to to minimizing the time, the go to market, essentially. I There were a lot of things such as growing a company that didn't have a lot of track record. It was very, very challenging, especially when you are going to small companies. Usually they go to a bank and ask for a loan to grow, to buy more machineries, and don't have when you don't have a lot of track record, it's hard to get loans, or if you get it, the terms that you're getting are not that great. So you had to really wait 5 to 10 years to be where I was thinking, where I wanted to be. And that was something that I said it would be nice having more track record. It would be nice to have a balance sheet that has 5, 10 years that you can show. Um, so also, um, that was that was an industrial business, manufacturing industrial, and each piece of machine was costing over $1 million. Uh, so I was to start, I had one machine that was trading X amount per year. And if I wanted to grow, then eventually I had to buy more machines. But it would take times to have enough cash flow to to have to cover the loan and then organically grow. That would have been a long process or a long shot.
Yeah. I
A lot of
it's yeah, that's super the key distinction between starting the business and bootstrapping from absolutely zero and then going into buying businesses and doing things like that. if if you were to go back to Eduardo in 2018, even maybe before starting the business, what would you say, what are some things you tell him to look out for to have things move faster along? What are some things that maybe some pieces of advice, some mistakes that you made? Um, would you have, maybe sold the business even quicker, or would you have looked into buying businesses yourself and doing that? Like, what are some things that you would have told yourself?
Don't start a new business. Unless, no, actually, unless you have like a lot of capital and a lot of industry experience in that specific field. A lot
Mm.
of like like connection network and know-how, and also a good amount of capital that you can put down like to grow the business.
Right. Yeah, and it sounds like you've been entering industries with a very high barrier to entry because, one piece of machinery is over $1 million. So, there's obviously other companies where it's just less startup capital is required. But even in that case, you're saying it's the way to go is to just, buy them build ultimately.
Yes, and yeah, definitely yes. That's like for sure is like it's like a a very much fast, and also I would say also more sustainable, because like from day one you already have like you can pay yourself, you can cash flow positive, and absolutely, absolutely.
Like, what it's funny because the advice you'd give yourself before building the business is to not build the business. Why do you think the American dream, or like the dream that so many of us have when we start going into business for ourselves or want to become an entrepreneur, why do you think the dream is, I can't wait to start this business from nothing and growing it into I can't wait to go from 0 to 1, go from nothing to something, versus why isn't the dream more so, I love to take this business off of this old couple's hands and then build off of that? Why do you think the dream is like, why do you think that's sold to us?
Well, that's for sure. Like it's there's more mm, there's like some more uh, that ultimately like entrepreneurs are seeing like someone that creates something from zero, and they're even more glorified. There's more like a storytelling behind the support, like that. However, like I think like there are different type of entrepreneurship. If you think like that mm, Elon Musk, he didn't like create Tesla. Ultimately, he bought Tesla from somebody else, and however, like people associated him with Tesla, and he was able like to grow Tesla as if it was one of his company. So I think there are like different paths. Also, when you come in, you add your own value and you shape the company. You add your personality, your vision. You shape the employees, then the direction that the company ultimately take. No one is, I think, like buying a business for just riding it. It's not probably it's not that exciting, or it's not like also like that make a lot of financial sense. If you look that you have to like like leverage the company up to 80% to mm, keep riding the same way, and ultimately pay like the interest rate and the loan. That's that's like that's more like buying yourself a job rather than
Mm.
owning a company. If that's the mindset, but I don't think like that's should be the right mindset. The right mindset should be like, right, I'm gonna like take this company to a next level. I'm gonna be doing like something that they were not able to do it. Most of the time, like with a company now that I scout, that I walk through when I speak to the sellers, um, my, usually the owners of these companies are like technicians, chemists, engineers, that they've been like doing a very, very good job in terms of operations, and in terms of coming out with good products, good formulations. However, they always tell me that they have like, when I asked him like why this company has been pretty much like not growing that much for the past like 10 years. And they tell me always the same problem, because when I do sales, I gonna like take care of product development, and when I do product development, nobody's selling. So that's why it was, and between selling and coming out with new product. I enjoy more like coming out with products, and that's why I've been devoting like myself for the past 20 years. And that's why like where's like usually the value that can be added, like bringing like these companies into real businesses.
It's yeah, like Elon. There's that founder movie, Ray Kroc. He didn't the original restaurant. Like, there's so many stories of that. That's the case. But I and DJ, I have a feeling this might be what you're asking. I don't know, but
Go for it.
the going back into the example of you're talking to your younger self. Not only the advice on what you would do differently, mistakes that you made, but if you were to walk yourself back then, who's never done a deal before, who's never bought a company, who doesn't know what to look out for. If you were to like take out a napkin at dinner and kind of write out, here's exactly step by step how to do a deal, what would what would that look like?
Yeah, a lot of things, also a lot of like tactical aspect that if we have time we can get into it. But probably there are like two things, that two mistakes that I made uh, that I lost, like that made me lose like a lot of time. Um, that I wouldn't like do it myself, and I'm not doing it now. And also I would give like to somebody else that is starting now. I would say um, try to focus in one industry. I wasted a lot of time like like researching and acquiring know-how and different scattered companies that they didn't have any like mm, correlation or connection with each other. I think like
Mm.
that's really is not efficient as a way of like moving in the space. Um, I would try like to be like like as knowledgeable as possible in one industry and focus in that industry. Um, Knowing like what you're talking about when you meet with owners, that's really much appreciated from them. Know that you speak the same language, that and mm, and the second one would is probably like don't go alone. Like it's not seen very well, and it's not like a good way to move forward. Like being by yourself as an entrepreneur. Always find first, or like like probably you'll find on the way as I did. But if you have like like a partner, even better. Like if you have more than one partner, you have like a team of people, a group of people um, that you get along with, that you trust, that you have like they have like some skills they you don't have. That's probably the best way to move forward. That saves you a lot of time and a lot of mistakes.
Mm. Yeah, that focusing on one, it's kind of similar advice to almost founders when they're starting their business to focus on one thing. It's interesting how that carries over. I
I mean,
I've,
there is this. I mean, when I speak to a lot of entrepreneurs, they take a lot of pride in saying, I'm by myself. I've been doing this by myself. I think that's you don't achieve a lot of things by yourself. Also, like I don't know. It's not also at a certain level when you grow. Um, when you are the solo entrepreneur and when you speak to an investor, to a bank, it's not it takes longer to build trust rather than like if you're like like a group of two, three, four individuals that are like working for the same mission, the same project.
What are some just tips you would have on, picking team members, picking partners, just people that building that group that you're going to build with? Because I know obviously I think almost every founder's probably went through this and had a bad business partnership, or hired a team member that didn't work out. What are some things that you're looking for when you're, one, picking a partner, and then two, hiring employees to come work with you on this vision?
Uh, but you need to be lucky, of course. Like and it's like like, you got to have a little bit of luck in finding like the right people. Um, that's for sure. It's important, and also like try to you know having like the ability to get along with people. It's also important. That you can all like yeah, think about it like that. Or you get along with your partner, or you're not gonna make it, or you're not gonna move forward, or you're alone. And it's always better to find an agreement or a mediation. But most of the time, when there is a shared goal, it's everything comes easier. Also, when especially when there is a lot of respect and admiration for the people that you're working with, that helps a lot.
How are you? Oh, I didn't mean to cut you off.
Yeah, I was
No.
saying I have a great amount of respect and admiration for uh, the people that I'm working with now. And that's I'm always very careful hearing their insight and also their feedback every time that I share something.
That's amazing. And how are you guys thinking through, the different roles in the business? Obviously, if you have three founders, all people who are, I'm assuming have equity in the business and have a large share. How are you guys thinking through roles and responsibilities, and how are you guys splitting up, just the workload and what you guys are actually doing on a day to day?
Yeah, we are very entrepreneurial in that. Roles are not that in stone, written in stone.
Everybody does everything, kind of.
Yes, it's kind of like a weed out by itself. I would say if there is something that you feel strong, that you feel you have about when we acquire a company, uh, and there is I don't know maybe I feel strong. There is a stronger connection with the seller of that company. I usually go forward and try to talk to them and negotiate and I carry the deal forward. Sometimes my partner feels for a different case scenario and I let them go. It's kind of a little bit like this, we kind of self-regulate and adjust ourselves based on the circumstance on the scenario.
That's really interesting. I think I've come across a lot of people who've said like, oh, you need to have these super clear roles in the business. You need to have like one front facing salesperson, someone on product, and just like really clear roles. But that's really interesting to hear your perspective, given the size of operation that you're running. And it sounds like you guys are able to work it out where you guys are all doing different things, but at the same time, you guys can overlap into each other's roles. And it sounds like there's just got to be a lot of trust there in order for
Very,
that to happen.
very, very trust. I mean, we are communication is important. We communicate on a daily basis. Everyone is on board and they know what's happening. And if there is something that it's missing or there is some value to be added, we can drop in and out as required, as necessary.
Yeah, that's so interesting because when you're talking about, I imagine that this is part of the book that you wrote as building a solid team and that you can trust. Because the book that you wrote, How to Beat Larger Companies Using Machiavelli's War Strategies, it's not like you could do that by yourself. Like there's no way you can do that on your own. So I guess is that a big piece to that book that you wrote? Is that a big? Can you kind of flesh that out in detail? Whether it's the team, what else? What else allows people to take on these larger companies? Um, yeah.
Yeah, yeah. As I said, I think I wouldn't be able to achieve what I achieved by myself. It really starting alone and choosing deliberately to be alone. It's an option, but I see that it's not it's not it's not an efficient way to move forward. And um, I see myself. I've been doing it by myself and also with a team. And I would say the amount of effort and ultimately the quality of work that it ends up from from a teamwork is always 100 times better. Um, 100 times better. Also again, there is there is also a trust aspect that is important. Um, when you present yourself as a group, there is much more trust and with your with anyone from
Mm.
anyone, from your like, from your stakeholders, from everyone.
What are some other key roles within outside of, so you have two other partners who are like core partners in the business, correct?
Yeah. Yeah.
Okay.
Yeah.
And then what are some other core roles in the business model that you're, working in right now? You're acquiring companies that are all in the same industry, you're rolling them up and trying to ultimately build a bigger company. Look, what's the structure of the company look like? What are some other important roles? How, what does that org chart look like?
Yeah. I realize, that the real challenge, of course, like running a deal from the moment that, like you started the first conversation to the moment that you close, that's the first battle. But after that, there is another battle to be fought, when you buy it, which is like the transitioning and the integration aspect. So like try, like, to make sense with the company that you just bought, to integrate it with the rest of the companies with the group, from all the operation, the ERP system, ITs, accounting, procurement. That's what you really unlock the values, and that having, like, the integration aspect, which is like a 6 months to 1 year process from the moment after that you buy the company. That's challenging. That's challenging, and it's not that immediate. It takes time. Uh, it takes time. Another thing that we have been doing that it helps, that I think is our model that we're using, and we try to use it as much as possible when there is the opportunity. We try to keep the owner, the seller, or the son of the seller, like, in place, in the company after that we bought them. We see a lot of value in this. Also, because, some companies, the seller just want to, like, sell, full buyout, and I don't want to deal with the company anymore. In that case, it takes time before you find a new CEO, and then we fill in as us as managing partner. We come in and we manage the company interim until we find a new CEO. Now a company that we are buying, it's a powder coating company, and the seller is retiring. However, his son, which is the VP of the company, is as knowledgeable as the father. He expressed interest that he want to stay in the company and keep working for the company, and that's like an ideal scenario for us when the old leadership or the old management stays in the company.
Right.
It's so interesting because I was both DJ and I are reading How to Make a Few $1 Billion by Brad Jacobs, and that's something that he was talking about too, and that you want the generational, like almost the family, to be in the business that you're buying. And then he was also breaking down his system for integrating, and he was kind of breaking down how he deals with egos. Because I mean, you have someone that's owned their business, and for the first time in their life, maybe they have a boss. For the first time, they have someone they report to. Um,
We have been doing this 3 times already, where, like, where the son or the daughter of the owner is willing to stay on board and to keep working for the company. And all of the time we have seen, like, these people, like, thriving without their fathers. We have been seeing really, like, that they were, like, like just an employee, not very motivated. Their voice was not heard that much with the father on board. And after the father leaves and they kind of like take a leadership role in the company, they literally, like, they blossom. They they make very good decisions, and they acquire more confidence in themselves. And mm, I guess it's normal, That's
That's
it's hard,
very
like,
interesting.
it's hard to sprout when you're under your father.
That's super interesting. I have a question for you. So when you're acquiring these companies, are you fully integrating under one brand and centralizing everything, or are you keeping each business kind of separate under this larger umbrella?
We try to keep, even, like, when we have to create, like, some new entities, we try to keep the same name, the same logo, the same brand as much as possible. We don't want to, like, we want to minimize the disruption. Also, customers are not always happy, like, to do business with the new entity, new
Right.
company. So we try to keep things as much as possible the same. And mm, however, like the company, it's owned by the group, by like
Right.
StarStep. Yeah.
Makes a lot of sense. And I'm very curious about, so you mentioned a key thing is obviously when you're integrating these companies, it's keeping on the talent or having kind of a successor in place who can continue to run the business, and then improving, some stuff on the sales side potentially. Walk me through some other like value creation things that you guys are doing. Obviously, you're deploying capital into the business and potentially helping with sales, but how are you guys going about really just, organically growing the businesses post acquisition?
Yeah. 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 We have a like, we're not a typical like, PE short term focused play. We have like a more like long term. We try to add value in the company that we buy. So that's always, we try to be very clear and communicating like that from the beginning, from to our banks and investors, that we are don't expect like, the first year, the first 1 or 2 years, like a crazy amount of growth or in margins, because we most of the time, like these companies, they are understaffed. There is no like a sales team. The owner take care of like multiple roles, and so we invest in the company, in new machinery, new line. We expand the business, new sales rep, new chemist that can be develop more products. So that's kind of like we try to create like like long term growth in the company. Try to add value in that sense. Um, we have like like a 10 years plan. We're not thinking like to flip the company and sell it like within 3 to 5 years. We want to keep it, grow it, make it more profitable, and that's usually done organically. And also like we look for similar companies that are for sale, or that like the sellers, they want to sell, the owners want to sell, and that we acquire like other companies in that space.
Right. No, that's incredible. You mentioned a 10-year vision. Would you be okay walking us through kind of where you guys are at now and in that 10-year vision, and where you're looking to get to?
Yeah. Yeah. We, as of now, we have five company we acquired. Five company we acquired, yes. And we are, in terms of size, we're like around $70 million combined of revenue. And we have around $12 million in EBITDA combined. We have a pipeline for like this year of 5 more deals. They were actionable. We're looking like to close them all by the end of the year. And there are like much bigger companies in this. We have been like kind of like building for companies within $1, 2, 3 million EBITDA. Now we're kind of try like to grow it and buy companies, bigger companies, since we have a track record and we build ourselves, our name in the space. So we're trying to grow the company. We are like, our goal is like try to become a group in the coding space that has like our goal is $100 million EBITDA. That's where we trying. That's where we're heading.
Wow,
I
that's incredible.
I the business side and the tactics and everything that you're doing, I think that's well, I mean, I'm learning a lot just listening to it, but I'd love to get a bit more on your mentality of it. When you talk about the Machiavellian stuff, you talk about that way of thinking about things. What about it gives you an edge in these negotiations and what you're doing? What could other deal makers learn from you and the way that you process? Because you're looking at it from a very unique lens. Like, not many people look at it through that lens. Not many people study that. What about that gives you an advantage, or um, makes you feel like you'll be able to close those types of deals? Like, yeah.
Yeah. I guess like having the track record, credibility that we have been doing same deals already. Like we were able like actually to buy companies and closing it and make them successful. That's very important. It's very important, like, um, to don't go solo, to be like a group of people with um, more than one, with a structured team. And also, I think, like, one of the things that give us an edge is the fact that we are industry focused, and we all are coming from, like, we're like operators. We're not finance people, Wall Street people. We're more like engineering, chemists, people that have been like doing this always. And that's like, when we reach out, like, for like, for to a business owner or seller, they know us already. We speak the same language, and that's very important. Also, a lot of deals, they come to us. Like one deal, it came basically one of the seller that of a company that we bought. Um, Referred us to, like, to one of his friends that he had, like, like a coding company as well, and he brought it like a deal. That's something that happens always more. That we don't, like, not always, like, the companies, like, make sense for us to buy, but um, it happens a lot of like deals are brought from our internal network, from supplier, customers, um, employees. That
Right.
they, yeah.
I'm curious, how is your one I have one question and a follow-up question to the question is, at age 16 when you immigrated to the US, what was your mindset like? Were you always kind of one of those people who was, you had a lemonade stand at like 8 years old and you're an entrepreneur from day one and you always had this bigger vision? Or was this something you kind of stumbled into and, it evolved over time? What was your vision like growing up? And, how have you changed as a person over time to, now you're running a company with, you said 70 million in revenue. I'm assuming hundreds of employees across the portfolio, a big team. Your goal is 100 million in EBITDA. How do you get to this place where you're thinking so big and yeah, how did you get to the mindset that you now have today?
Yeah, I mean, I've always been entrepreneurial. I always like, mm, 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 uh, I always, like, like, I knew that I was gonna have to do, like, something, like, for myself. Um, I I ended up like working for, like, for like a Fortune 500 company, ultimately, like corporate America, and that was useful. I learned a lot. However, like, I knew that that was not gonna be ultimately, my end career. I didn't see myself, like, 20, 30 years there. I knew that I had to do something more like entrepreneurial, where I was more like creating, like, my own path rather than following, like, something that was already assigned. That's always had this feeling. Um, Probably I got it, like, from my father. My father was also an entrepreneur, an engineer, entrepreneur, and that's having seen, like, in my family. I didn't see any alternative to that. I didn't have any choice than doing that.
That's amazing. That's amazing. And how have you, like I said, you obviously had that inkling and that entrepreneurial itch, but did you ever think it would get this big or your vision would become this big? Or were you just thinking like, hey, I want to go, build something on my own, but you had no idea how large it would become?
I I I don't see it, like, as big. I still feel small, to be honest. It really feels small. I feel like, this is just the beginning.
Absolutely.
I'm just starting. I'm just starting now.
That's amazing. I think every entrepreneur I've ever met has the same feeling. No matter where you're at, it's always, that's amazing. It's incredible to hear.
I still have very much, like, that how's it called, FOMO, fear of missing out. I still have
Yeah.
that form of
That
anxiety.
chip on your shoulder.
Yeah, exactly.
I love it. I love
I
it.
don't feel at all, like, like complacent or relaxed or comfortable.
Do you, what I'm learning from everybody is that there was this one person that put them onto this world of private equity, of being able to acquire businesses and everything. Um, because you do feel that FOMO, and I guess who do you learn from? Who does Eduardo look to for advice now? Who is a mentor that you have in your corner? Who do you look to when the path isn't so clear? Like, who is it that you get advice from, and what are some things that they're whispering in your ear about what you're building?
Well, it's there are a lot of people. There is no one. There are a lot of people that I admire and um, that I see them like as good people with good intention, and I see like that in 10 years, 20 years from now, I want to be them. Those are like the type of people that I really uh, chase them, and I try like to keep in touch and to talk to them every time like that they can. Uh, so uh, there are a lot of people, and they're like I see I feel supported, and I feel like that they're rooting for me. Those are like
Yeah.
the type of people that that they're my mentor.
What's some advice that sticks out to you? Some game that they put you on, some advice that they've given you that you can point to that radically shifted how you think, radically shifted your business.
Um, mm, Advice that they gave me, and a lot of advice. A lot of advice. Um, hmm, I don't know. I'm thinking about like a good advice that I got from them. Uh, well, probably it's just like knowing that that you can count on them when you need them. That's more than like it's not really like one thing that they told me. It's just like knowing that you have like a support group of people that you can call them, you can count on them. And with some people, like some mentors are like they're more personal. The relationship that I have. Some people are more like professional. So it's more like related like to business. And but the fact that I know that I can count on them. That's probably like what's that's the best like advice that they can give me. Feeling that you're supported.
Right. No, that makes a lot of sense. I'm curious, have you ever had any deals that you've personally acquired that were bad deals? Have you, had any horror stories or war stories where you guys have made a bad deal and it, set you guys back?
Mm, no, I wouldn't say bad deals. No, we didn't have any bad deals. Probably we overpaid sometimes. We paid a little too much. However, we kind of had to. We really like the company. We saw a lot of value in that, but it was not it was like an open bid. So there were like a lot of competitors bidding for that company, and we had to to win the deal, we had to like pay a higher multiple than what we wanted. Yes,
Right.
that was like probably like uh, if you want to put it this way, it was the bad deal. Yeah.
That makes sense. And is that happening?
We do tons of due diligence though. Spend a lot of time. We walk through the facility. We spend a lot of time with the seller, with people and employees. We do a lot of financial, legal, environmental due diligence. So we we kind of like get a good sense of what we're buying.
Gotcha. And you guys run into that a lot where a lot of these deals are being shopped by competitors and the deals are going to basically where you're bidding and then you're having to overpay, or do you guys have a lot of proprietary deal flow that's just, you're the first touch with the business?
We try to favor that proprietary like deals. We try to like to we're always like working more on the. I mean, yeah. At the beginning was more like broker deals from investment bankers or brokers. Uh, Now, if we can choose, and we're trying like to focus on deals that they're not brokered. They're like coming from our internal network.
Right.
Uh,
And that's probably that brand piece, like you said. Now you guys have established yourselves, and you said people are coming inbound. They know you. How has that affected just your ability to get favorable terms,
Yeah,
get the deals you want?
funny was when in that world, like, when they hear, like, that their friend or their colleagues or their competitors, they sold their company for XYZ, all of a sudden, like, there is, like, that creates a little bit of buzz, and we hear, like, like, other sellers, other, like, business owners that reach out to us. Oh yeah, I heard, like, that you sold the company, that one. Are you guys interested? Because I'm thinking, like, to retire. I didn't know there was a possibility and opportunity. And they kind of, like, when you put that bug in their, like, in the back of their brain, that there is, like, actually they can really, like, sell their company for that much. They proactively reach for us.
Right, right. And you said you guys kind of started out in that 1 to a few million in EBITDA range, and now you're going up to and trying to do some bigger deals. Walk me through that process. How are you guys thinking about, one, the size of businesses you're going after, raising the funds? What's different about those type deals versus the ones you were doing before?
Yeah, we started, like, with companies of the size of between, like, $500,000 EBITDA up to $2-3 million EBITDA. Um, to start, like, building up, our, like, credibility and track record. Now that we believe we have a good platform, a good base, we are, like, moving up in the middle market more. And we are, like, our, like, pipeline. mm, We have, like, companies in the size of between $10 and $20 million EBITDA.
Wow.
That's the size of the company that we're doing. We realize also, and that buying a company of $1 million EBITDA and buy a company of $10 million EBITDA, it's exactly the same amount of effort, exactly the same amount of, like, time consuming energy and money that you're spending, like, in acquiring it. So there is no, like, there is no, like, it's not because the company is smaller, it's easier. It's exactly the same. So at this point, like, we rather, like, like, moving up, upward.
Right. And I'm assuming there's potentially even some advantages to that. There's maybe more efficiency. Maybe the business is actually better just because it's bigger. Would you say that that's the case?
Yes. Yes, I would say so. Yeah, there is more layers of management, more margin, uh, less room for mistakes, and more room for mistakes, I would say. And yes, definitely there is. Yeah, yeah. It's easier. It's in that sense. It's also easier, like, to get finance for bigger deals. Uh,
Oh yeah, that's so interesting because I went to this event last week, and he was talking about how the bigger the business is, the more attractive it actually is. Like the more likely that it is gonna have a buyer than a smaller business because it's de-risked.
Yeah, well, if you think about it, there is more, like, on the balance sheet. There is more, like, just more, like, assets. There's more collaterals. Uh, so it's safer for, like, for equity and debt investors, like, to come in. Also, there is more, like, meat at the end of the year, like, for dividends or to reinvest in the company for growth. It's it's um, it's much easier, like, to have a conversation to finance those type of deals.
What are the multiples like on, say, a business with 1 million in EBITDA in this industry versus one with 20? Are you paying significantly more, like from a multiple perspective?
No, no, I wouldn't say no. No, wow, multiples are the same. It depends a lot. Well, depends a lot, like, on the type of, like, of course, if there is, like, some IP, intellectual property, some, like, key formulation, if there is a brand behind, uh, if there is, like, a customer concentration, that's, like, that's affect a lot the multiple they end up buying. Usually smaller companies, they have, like, like, very high concentration of customers. Uh, and that's kind of, like, lower they have, like, those 3-4 golden customer that been doing, like, like, business, and they have, like, 80% of their revenue they cover.
Right.
And that's like, that's risky, of course, and that's the valuation goes down in that case. Um, but no, it depends. No, not necessarily like, bigger is like, it means like bigger company means bigger multiple. Not necessarily. Also, the motivation of the seller that play an important role. Um, and how much they and also if they're broker. That's why like, usually like, broker deals are like much higher multiples because they opened up like their bid process to dozens of investors or potential buyers, and that's like increase like, the multiple.
Right.
Mm.
What are some tips on winning those deals? If there's a company that you guys like, we absolutely need this company, you love it, and it's a brokered deal, so there's a bunch of people competing. Is it solely just come down to a price thing, or are there any other tips and tricks that you have to, be able to win the deal?
Yes, we noticed like, the feedback that we get from sellers and from brokers is that we always like, we are in the sweet spot as a buyer. In the sense like, there is like us, that we are like strategic, like independent sponsor, strategic investor, and then there is above us there is like PE group, private equity groups, and below us there is like the individual buyer search funds, mm, sole entrepreneurs that they try to buy the company. The PE firms, like, they're not seen well because they are like essentially, the way they operate. They have like a short term plan in place. They usually fire people. They flip the company and then they sell it within like 3 to 5 years. That's their or like sometimes we have seen doing this. They shut down their operation. They consolidate like their portfolio of clients with different with their company.
Right.
Then the smaller one, they don't have like mm, the bandwidth, like to actually close the deal to buy the company, and so like we are like kind of like the preferred like buyers. If we make all the same offer, we we usually win. We usually
Right.
win.
So it's really a positioning thing. It's your guys' long-term vision, the brand, the reputation, and then, at that point, if it's an even offer, you guys are winning.
Yeah, yeah, absolutely. Because they know like it's like they don't want to like that their company get destroyed.
So
Being careful, like it's their baby after all. And when they hear our plan of like investing more capital, increasing their capex, growing the company, they're very very much pleased with that plan.
gotcha. I know we're coming up here on time, but I just had one more question about that. So, in the way you guys are operating with this long-term vision, and it sounds like it's a different model than just traditional PE. What are the key differences? Because I know with a traditional private equity model, when they raise the capital to then deploy into the businesses, the clock starts ticking, and they have to think short term due to the fact that they have a limited amount of time to deploy that capital and produce returns for their shareholders. How is your model different, and how are you able to have this long-term vision?
Uh, yeah. Essentially, we try like to play for the long run. We don't have any clock ticking in that sense. We don't have P usually have like already allocated capital, and whether like mm, they close a deal or not, they still like they have to pay like reward like their investors.
Right.
So they have like this kind of like this milestone they have to reach every quarter, every year. They have to do something with their allocated capital. Uh, we don't. We try like to buy just what it makes sense and where we think we can add value, and we try like to get on board like investors that they think like us, that they have like patient capital, and they know that where we're going, they believe in our vision, and they know that we have like 10 years plan.
Mm,
Wow.
that's so interesting. Yeah, that's the difference between the fact that they have outside investors that are relying on returns versus you guys. It's an advantage to you guys almost in the positioning and pretty much everything that you guys are doing. I last question before we wrap up is, if I'm at dinner with you and your partners, what's your guys' biggest lesson from 2025 so far that you could share?
But that there is a lot of like confusion, and well, we can expect that, every time there is a new administration, uh, there is always a little bit of like uncertainty. Uh, we see this like every 4 years happening. Uh, Also, a lot of like there is a lot of fear, a lot of panic. There is not really like nothing like no economic data at the moment. Uh, so we try to to stay calm, play for the long term, and however, we're seeing a lot of concern, a lot of like volatility in the market, um, mm, from like mm, from what's going to happen with these tariffs and
Yeah,
economic downturn expected. We again, that's the beauty of having like a long term plan, that you ride like whatever whatever winds it comes, you ride it, whether it's like tailwind or headwind. Eventually the wind shift and we're still gonna be there.
interesting. It's like maybe you'll maybe you'll appreciate this reference. It's kind of like the Jose Mourinho of private equity, of buying and selling businesses. It's not the flashy, DJ. I know you don't watch a lot of soccer, but like Jose Mourinho, he plays defense. He's slow, methodical, nice build up, and that's very,
Yeah,
very
not
cool. There's
fancy,
different
not a
styles.
fancy, not a fancy soccer style, but like effective.
You win, man. You win. That's all that matters.
Yeah, but let's see what's gonna happen. I mean, there is a lot of I'm sure like also like you guys, there is a lot of concern, uncertainty now, but eventually we'll everything will settle.
For sure. Well, Eduardo, thank you so much for the time. I learned a ton from this conversation, especially because you guys are running a different model. So, I mean, this conversation alone taught me a lot. I know DJ learned a lot. And where can people find you? Where can people, if they want to get in touch with you, maybe they know a guy who knows a guy that, might be able to stumble into a deal or something. Where can people find you? Um,
LinkedIn, yeah, LinkedIn, Edoardo Maggini.
Perfect. We'll make sure that that's attached in the description of this episode. And I appreciate you joining us on the episode of the Deal Flow Show podcast.
Absolutely, and I'm based in New York City. If someone pass by to New York, drop me a note. Happy to meet.